Despite ongoing political turbulence and controversial policies associated with former President Trump, the US dollar has shown surprising resilience in global markets, defying predictions of sharp declines. Analysts note that while geopolitical tensions and fiscal uncertainties often weigh heavily on currency strength, the dollar has remained remarkably stable due to investor confidence. Investors are increasingly viewing the US dollar as a safe haven amid global economic volatility, choosing it over other currencies perceived as more vulnerable to instability. The Federal Reserve's monetary policy decisions have played a significant role in supporting the dollar, with interest rate adjustments signaling economic stability to global investors. Rising interest rates in the United States have strengthened the appeal of the dollar, attracting foreign capital seeking higher returns amid uncertain market conditions. Strong demand for U.S. assets, including Treasury bonds and equities, has reinforced confidence in the dollar, providing a steady source of international liquidity. Despite political controversies and trade tensions, the dollar's resilience highlights the underlying strength of the U.S. economy relative to global peers. Market observers are closely monitoring how trade dynamics, government spending, and policy announcements will continue to shape the dollar's performance in the coming months. Economic fundamentals, such as employment rates, GDP growth, and consumer spending, remain central factors influencing investor perception of the dollar's value. Even in the face of unpredictable policy shifts, investors are finding the dollar to be a reliable store of value, reflecting trust in U.S. financial markets. Global uncertainty, including conflicts and financial crises abroad, has increased the dollar's role as a safe haven currency for risk-averse investors. Analysts suggest that political controversies alone are insufficient to destabilize the dollar when supported by strong economic indicators and international demand. The dollar's strength has also been bolstered by trade imbalances, with foreign nations continuing to hold large reserves of U.S. currency as part of their economic strategies. Financial markets have reacted to both domestic and international events, yet the dollar has maintained a steady course, demonstrating resilience under pressure. Investors are closely watching Federal Reserve announcements, knowing that interest rate policies directly affect the attractiveness of holding U.S. currency. Currency traders have adapted to the volatility surrounding political developments, with many choosing to maintain positions in the dollar rather than risk less stable alternatives. The U.S. dollar's role as the world's primary reserve currency has further reinforced its stability, even as political debates dominate domestic headlines. Long-term confidence in the dollar is supported by the United States' diversified economy, technological innovation, and robust financial infrastructure. Despite criticism of trade policies and government spending, the dollar has benefited from global recognition of the U.S. economic system's relative resilience. Investors' reliance on the dollar reflects a combination of historical trust and practical necessity, given its widespread acceptance in international trade. Political uncertainty can influence short-term market sentiment, but the dollar's long-term value is largely driven by economic performance and institutional strength. The Federal Reserve's careful calibration of monetary policy has reassured markets, with actions designed to balance growth, inflation, and employment. International investors consider the dollar a cornerstone of portfolio diversification, reducing exposure to riskier currencies in unstable regions. Geopolitical tensions often trigger temporary market volatility, yet the dollar has consistently rebounded due to its established global demand. Fiscal policy decisions, including budget allocations and national debt management, are closely scrutinized for their potential impact on the dollar. Despite criticisms of economic policies, international confidence in U.S. governance and financial oversight continues to underpin the dollar's stability. Global crises, from conflicts to economic recessions, often amplify the appeal of the dollar, reinforcing its position as a preferred currency for safe investments. Currency markets have shown that the dollar can absorb shocks that might destabilize other major currencies, highlighting its unique status in global finance. Investor behavior suggests that confidence in the dollar is rooted in a combination of economic fundamentals and strategic international positioning. Market analysts emphasize that political turbulence, while newsworthy, does not automatically translate to currency depreciation when economic indicators remain strong. The interplay between domestic policy and global market perception has created a dynamic environment where the dollar continues to outperform expectations. Trade negotiations, tariffs, and international agreements are closely monitored, yet the dollar has remained a reliable measure of value amid uncertainty. Economic forecasts indicate that the dollar is likely to maintain strength if the U.S. economy continues its trajectory of growth and stability. Investors' willingness to hold U.S. assets has been a crucial factor in sustaining the dollar's value despite occasional policy controversies. Global capital flows show consistent demand for the dollar, reflecting both short-term safety concerns and long-term strategic investment choices. The dollar's resilience is partly a reflection of global interdependence, as countries rely on U.S. currency for trade, reserves, and financial transactions. Political rhetoric may influence market sentiment temporarily, but tangible economic performance remains the key driver of the dollar's trajectory. Financial analysts predict that the dollar will continue to serve as a benchmark for other currencies, reinforcing its central role in international finance. Even amidst uncertainty, the dollar's strength underscores the confidence of international investors in U.S. economic governance and regulatory frameworks. Emerging market currencies often exhibit greater volatility, which further enhances the relative appeal of the dollar as a stable alternative. Policy debates regarding fiscal stimulus, taxation, and government spending are closely watched for potential implications on the dollar's value. Investor sentiment is influenced by both macroeconomic indicators and political narratives, yet the dollar has remained remarkably resilient overall. Currency strategists note that the dollar's stability reflects a combination of strong economic fundamentals, institutional reliability, and global trust. Interest rate expectations continue to play a central role in shaping investor decisions regarding the dollar and other major currencies. Global financial crises highlight the importance of a reliable currency, and the dollar consistently fulfills this role more effectively than most alternatives. Despite fluctuations in other asset classes, the dollar's performance has remained steady, providing a foundation for global investment strategies. Investors are balancing short-term risks with long-term confidence in the dollar's continued strength and centrality in global finance. The ongoing interplay of domestic and international factors ensures that the dollar's trajectory is closely monitored by governments, businesses, and investors. Economic growth metrics, including employment, consumer spending, and industrial output, continue to provide critical support for the dollar's stability. International trade reliance on the dollar reinforces its value, as major transactions and commodities are priced in U.S. currency. Political controversies, while often making headlines, have proven insufficient to override the dollar's underlying economic advantages and market trust. The dollar's resilience is a testament to both market confidence and the strategic role it plays in global economic systems. Analysts suggest that as long as the U.S. maintains strong institutions and economic performance, the dollar will continue to thrive despite political turbulence. Currency markets demonstrate that confidence, liquidity, and safe haven status are essential components of the dollar's ongoing strength. The role of the Federal Reserve cannot be understated, as its policies directly influence interest rates, liquidity, and investor confidence in the dollar. Global investors are likely to maintain positions in the dollar, prioritizing stability over speculative opportunities in less predictable currencies. Trade balances, government debt management, and fiscal policies remain critical indicators for evaluating the dollar's long-term trajectory. The consistent demand for U.S. dollars in foreign reserves and international trade underscores its unique position in global finance. Even as political debate intensifies, the dollar continues to serve as a foundation for international economic stability and financial planning. In conclusion, the U.S. dollar's performance reflects a complex interplay of economic fundamentals, investor confidence, global demand, and institutional trust, allowing it to remain resilient despite political turbulence and controversial policies.